Hey everyone, welcome back to the channel. Moving on from our last video about things you may want to do before investing, which you can find right here, let's take a look at a few brokerages that you could choose from and what they offer. Today we will only be looking at brokerages that have a $0 trade commission, no minimum balance requirements, and no annual fees. All the brokers we will look at also offer Roth and regular IRA accounts if you're interested in those. There are some things to consider when choosing a brokerage though. Do you plan on trading futures or Forex at some point? What about the ability to buy fractional shares or having access to mutual funds or zero expense ratio index funds? In this video, we're going to talk about Webull, Charles Schwab, TD Ameritrade, and Fidelity. There are plenty of similarities with these brokers, and I think that they're all pretty good, but there may be some differences that could be the deciding factor for you. It's also important to mention that Schwab is acquiring TD, so some of these things might change in the future. But with all that out of the way, let's take a look at these four brokers and break down the similarities and differences so you can open an account and start trading today. Let's jump right in. Alright, so let's take a look at the first feature you may or may not want to have, and that's the ability to buy and sell mutual funds. So what exactly is a mutual fund? Well, a mutual fund is similar to an ETF or index fund where you invest into basically a basket of companies. So you're diversified without all the extra effort of having to go around and buy small amounts of hundreds of different stocks. The main difference between mutual funds, ETFs, and index funds is that ETFs and index funds are usually passively managed and mutual funds are actively managed by a fund manager, and that fund manager is trying to beat the market. Now, whether they succeed in beating the market is another story, and since there are thousands of options from the brokers who offer their own mutual funds, we won't be diving into that today. Another thing to consider with mutual funds is their expense ratio. Mutual funds, index funds, and ETFs typically have expense ratios, so this isn't anything new. This ratio tells you the amount it will cost per year to be in that fund. So hypothetically, if a fund has an expense ratio of 1%, which is ungodly high, you'll pay $10 per every $1,000 you have invested, 1% of your $1,000. ETFs and index funds usually have lower expense ratios than mutual funds, so keep that in mind. Fidelity also now offers new zero expense ratio index funds, but only if you buy them using a Fidelity brokerage account. Out of these four brokerages, Webull is the only one that doesn't offer mutual funds. But if you're happy with ETFs and index funds, you can still trade those on their platform. Next up is going to be charting. All four of these brokers have the ability to do technical analysis with live charting, but the way you go about it might be slightly different. Both Webull and TD Ameritrade have desktop applications and mobile apps that allow for this type of analysis. While Fidelity and Schwab both have advanced desktop applications and mobile apps, their mobile apps aren't geared towards technical analysis and day trading. They are perfectly fine for making trades and looking at your portfolio, as well as reading current news and lots of other things, so they are by no means useless. But if you plan on being on the go and still want advanced charting, Webull or TD might be the better pick for you. If you do most of your analysis on a computer though, then any one of these will probably be fine for you. Let's move on to trading fractional shares. This can be a big one for people who don't have a lot of money to start investing with, but still want to get in the market. Let's say you want to buy some Amazon stock, which at the time of this video being recorded is like $3,200 a share. Well, not all new investors have $3,200 to throw at one stock, right? So being able to buy fractional shares means that whatever dollar amount that you do have, you can put towards buying a portion of one whole share and you can still be in the game. Both Webull and TD Ameritrade do not allow fractional shares, whereas Charles Schwab allows fractional shares of stocks that are in the S&P 500 and Fidelity allows fractional shares for any stock or ETF. On to the next feature, futures and Forex trading. Now, for most people, this feature probably isn't that big of a deal. Personally, I don't trade futures or in foreign exchanges, but if you're looking to do this at some point, you will want to have your account with a brokerage that allows for it. In this case, you will need to stick with Schwab or TD Ameritrade. You should also be aware that you pay a fee for each one of these trades, so don't be surprised if you decide to dabble in this while using TD or Schwab and you get dinged for some fees. Now let's take a look at options contracts. Options contracts for all these brokers are zero commission, but Webull is the only one without a contract fee. Schwab, TD, and Fidelity will all charge you a 65-cent contract fee per contract. This means Webull is the cheapest for options trading since all you have to pay are the normal regulatory fees. For our last comparison, we're going to look at things like credit card offers and cash management accounts. If you're unfamiliar with what I'm talking about, some brokerages offer cashback credit cards whose rewards pay directly back into your brokerage account. There are also what is called cash management accounts that act like checking accounts. You can set your paycheck to directly deposit, or you can just transfer funds from your bank into your cash management account. Funds can then be spent with a debit card, just like a checking account. You can pay bills, you can do whatever you want. You can also move that money directly into your brokerage account so you can use it in the stock market. When you transfer money from your cash management account to your brokerage account, the funds are immediately available since it's all coming from the same institution. This can be very convenient if you have direct deposit from your job into your brokerage because your cash management account eliminates having to wait for funds to clear from your bank into your broker. I actually keep my emergency fund in a cash management account so that I can keep buying on those red days here and there without having to wait for funds to clear from my bank. The other convenience factor comes from having most of your financials available with just one app or one website. If this is something that interests you, Schwab, TD, and Fidelity all offer these products. Webull is the only one that doesn't. So which brokerage do you think you might use? Is it one of the 4 that I went over today, or are you thinking about using a different one? Hopefully I gave you a few things to at least think about when picking what brokerage you want to use. If you want mutual funds, then Webull may not be your best option, but if you really want to buy fractional shares, you're probably going to have to look at Schwab or Fidelity. At the end of the day, if you're using a reputable broker and you take the time to understand their apps and their software, you're probably going to be fine. Now go sign up for one of these and start making some damn money. I hope you guys enjoyed this video. If you did, please leave a like. If you want to sign up for Webull, feel free to use my referral code in the description below so we can both get some free stocks. If you already have a brokerage that you use and I didn't talk about them, leave a comment on who it is and why you like them. Check out our description for links to the Personify website so that you can get signed up to test our new app that's in development. Or you could sign up for our newsletter and get some good ideas for plays to make in the markets every week. Also check out our Facebook group and link up with other like-minded individuals and try to talk some strategy. That's all I've got for you guys today. Thanks for watching, everyone, and take care.